Imagine walking outside into a beautiful sunny day without realizing a massive Category 5 hurricane is brewing just over the horizon. That is exactly what thousands of everyday retail investors do when they look exclusively at a stock's current price chart. A rising green line looks fantastic on the surface, but raw price action is a lagging indicator that frequently masks severe underlying structural market rot. To protect your hard-earned portfolio from getting absolutely blindsided by sudden market crashes, you must stop guessing and start reading the market's hidden meteorological vital signs. Today, we are step by step building your ultimate market weather station using 5 elite institutional-grade tools that Wall Street professionals use to forecast impending financial storms. By combining these unique data points, you will learn to spot dangerous market tops and lucrative market bottoms long before the mainstream media sounds the alarm. Let's step inside the dashboard.
Our first crucial instrument is the VIX Volatility Index, which functions exactly like an atmospheric barometer measuring shifting air pressure. Often called the market's fear gauge, the VIX tracks how much premium institutional investors are willing to pay for protective options contracts. When the market is calm and drifting upward, air pressure is stable, and the VIX drops below 20, reflecting widespread investor complacency. However, when a sudden storm hits, the VIX spikes violently upward past 30 or 40, signaling extreme atmospheric turbulence and panic. Maya tracks this metric closely because historical data shows that an exceptionally high VIX often marks the absolute peak of a market sell-off. As the old legendary Wall Street saying goes, when the VIX is high, it's time to buy. And when the VIX is low, look out below. Let's calibrate this atmospheric tracker before moving directly to our next essential weather sensor on our dashboard.
Next up on our weather tower is the Relative Strength Index, or RSI, which acts like a hypersensitive lightning detector, measuring sudden electrical saturation in the air. The RSI tracks the speed and change of price movements on a scale from 0 to 100. Think of it like stretching a giant rubber band. When eager buyers pump money into a hot stock too quickly, the band stretches into overbought territory, above 70, indicating the atmosphere is dangerously overcharged and due for a cooling, regular discharge. Conversely, when panicked sellers dump shares indiscriminately, the RSI drops below 30 into deeply oversold territory, signaling an overextended move ready to snap back. Maya watches for these electrical extremes because they reveal exactly when a trend has become completely unsustainable. Knowing when the market is overextended prevents you from buying at the exact top or selling at the absolute bottom of a crash. To understand what the crowd is experiencing on the ground, we check the overall social climate using the famous Fear and Greed Index. Think of this as a giant public weather vane tracking collective investor psychology, from total freezing terror to scorching, unhinged euphoria. This index combines multiple underlying factors, including market momentum, safe haven asset demand, and junk bond demand, into a single, highly readable dial. When the dial swings into extreme greed, the crowd is running around unprotected in a heat wave, completely blind to the sudden storm clouds stacking up above them. But when it drops into extreme fear, investors freeze up, panicked by the cold wind, and sell off great assets at massive discounts. Maya uses this index as a contrarian indicator, remembering that the best time to look for clear blue skies is precisely when everyone else is huddled inside panicking over the dark oncoming storm clouds. Now, let us zoom out to look at the macro climate using 2 long-term radar tracking tools, the 200-day simple moving average and the maximum drawdown from 52-week highs. The 200-day moving average acts as our ultimate long-term climate baseline, smoothing out daily market noise to expose the true primary trend direction. If a stock's current price line falls below this critical threshold, it means a long-term economic winter has arrived, and caution is heavily warranted. Simultaneously, tracking the historical drawdown tells us exactly how much water has already leaked out of the market's high watermark reservoir. If the index is sitting at a minor 5% drop, it is a routine passing shower. But a deep 20% drawdown indicates a full-scale structural blizzard. Maya pairs these baseline. Now that your comprehensive weather dashboard is fully assembled, you must never look at just one instrument in total isolation. True investing mastery comes from synthesizing these unique signals into a single defensive portfolio rule set. When the VIX spikes past 30, the RSI drops under 30, and fear reigns supreme, the individual tools are all screaming that the storm has reached its absolute peak intensity, creating a prime generational buying opportunity. Conversely, when greed peaks, the RSI stretches past 70 and the price floats far above the baseline, the dashboard warns you to pack your umbrella and brace for impact. By watching the market's vital atmospheric signs instead of trading on pure emotional impulse, you can navigate any financial environment with complete clarity. Start building your own custom monitoring station today. Protect your hard-earned assets and thrive beautifully in any financial climate. As always, appreciate you hanging out today. See you in the next one.